our third chapter, that is accounting standards. In this chapter, we will understand what is the meaning of accounting standards, what are its objectives, features, limitations, and advantages. Okay, before going to the accounting standard, we will see these summary of GAAP. What was the use of GAAP and why the accounting standard was brought in? Okay, so first of all, we'll understand GAAP. GAAP are the policies and the rules which are adopted for recording and reporting of financial transactions. It is in very clear form, the sentences, that it is just only the policies or the rules which are adopted for recording of the transactions. So, many companies adopt their own policies and rules for recording their transactions. Okay, so this was the basic drawback for the users, which does not help them to compare between two or more business enterprises, as the rules and policies of the companies were different. Okay, to combat this or to reduce this, accounting standard was brought up. Okay, and this accounting standards was brought up by Council of Institute of Chartered Accountant. Okay, chartered accountant. So what accounting standard says, these are the rules, guidelines or practices for preparing a financial transactions, okay, which to bring uniformity and consistent. Okay, the main focus of the accounting standard was to bring the uniformity between the enterprises and to bring consistency. Okay, so that it will help the users to understand the financial position of the enterprise and can be comparable between two or more businesses. Okay, so we have seen what is accounting standard. Now we will move to the next topic, that is the definition. Okay, accounting standard is the written policy. Okay, is the written policy means it is a written policy which is a draft is drawn in which all the policies or all the practices are been written down so that it must be followed by the different businesses. Okay, document issued by expert accounting bodies. Which was the expert accounting bodies? Council of Institute of Chartered Accountant of India. Okay, covering aspects of recognition, measurement, treatment and presentation of accounting standard transactions in uniform and consistent manner. Okay, so what accounting standard says is just a written policy which is issued by expert accounting bodies, that is ICAI, Institute of Chartered Accountant of India, covering the aspects of recognition, measurement, treatment and presentation of accounting standards, which must be, which shows uniformity and consistent. Okay, so this is the definition of accounting standards. Now we will understand the features. What are the features of accounting standards? The first feature of accounting standard is written document. What does it mean? Means it is a written document of a descriptive nature, okay, on a specific accounting policies. Specific accounting policies. Okay, to compile financial statements. To compile financial statements. Okay, now the next feature is content. What does a content mean? Content include rules. Okay, rules for recognition, measurement, and disclosure. Disclosure of financial information. Okay, contained are the rules which helps in recognition, measurement, and disclosure of financial information. Issuing authorities. I have told you who issue. This is issued by a highly specialized authority, the body, that is ICAI. Okay, flexible in nature because as it is man-made, it is flexible in nature and it can be changed uh, according to the situation based. Okay, or according to the whatever the development needs. Okay, development needs. Authoritative guidelines means it serves as a guideline. It serves as a guideline for accounting and drafting of financial statements. Okay, so these are all the features of accounting standard. Now, next we'll see objectives. Objectives of accounting standard. As I have told you, what is the objectives of accounting standard? The main objective of accounting standard is to bring uniformity in accounting practices and to ensure transparency, consistency, and comparability. Okay, this is the main objective of the accounting standard, just to bring uniformity in accounting practices, transparency, consistency, and comparability. This is the main objective of accounting standards. Okay. Now we'll see advantages and disadvantages. Advantages. What are the advantages? It helps in preparation of financial statements. Preparation in financial statements. Okay. The second, analysis of financial results. Okay. The third is presentation of financial information. Number 4, provide, use and perform. Okay. So these are all the advantages of the accounting standard. Now we'll see disadvantages. Accounting standards. Accounting standards restrict the introduction of alternative treatments. Okay, means as the policies and rules are very strict, we cannot introduce any alternative of the any policies. Okay, it is man-made. As we know that human is error. Okay, so it is not necessary whatever the policies which are made by human will be absolutely correct. Okay, it does not pass any verification. So this is the second drawback of the accounting standard. Okay, third, it can be difficult to get everyone to agree on a new accounting standard. Okay, all of them cannot make compromises to just to agree with the accounting standard, because every company have their own policies. They want their flexibility to follow. So this is the another drawback of accounting standard. Okay. Number 4, changing business environment. Okay, so we are seeing that as the business environment are changing day by day. Okay, so it is necessary to bring the new accounting standard as which are already required. Okay, but the strict rules which are followed in accounting standard does not help to change according to the business environment. So this is the another drawback. Basis of accounting. Basically, there are two types of basis. Number 1, cash basis, and number 2, accrual basis. Okay, we will understand these two bases one by one. Number 1, cash basis. Under this, entries in the books of accounts are made only when it is received in cash. received in cash and not when payment is due. Okay, we will understand with the help of an example. Suppose office rent of December 2014 was paid in January 2015. Okay, so what we see here, the office rent of December was due on December only. We have to pay the rent of December in the month of December only. But what we are seeing, that rent of December was paid in the month of January 2015. Okay, the rent of December 2014 was paid in the month of January 2015. So what we are seeing, that we are just paying in the month of January, means we are receiving it in the month of January 2015. Okay, the cash is paid in the month of January. So in the books of account, we will record in the month of January. Okay, because we are receiving in the month of January. This shows cash basis. Okay, cash basis explains only when the entries are made when it is received in cash and not when the payment is due. Getting me? Now we will understand the second basis, that is accrual basis. The same example, we will follow the same example. Office rent due on December 2014 but paid in 2015 January. Okay. Now what accrual basis says, it doesn't matter when we are going to receive it. Okay, it doesn't matter whether we are going to receive it in January 2015 or we say February 2015 or we say March 2015. It doesn't matter at all. Just what we have to focus, when it is happening, when it is due. Okay, we have to just see when the amount is going to due. So here office rent due on December 2014. Okay, so it is due on 2014. So in books of accounts we will record in the month of December. Okay, rent. Getting me? In accrual basis, it doesn't matter when we are getting or when we are receiving the cash, whether it is January, February, March, April, May, doesn't matter. Just what we have to focus on is when it is getting due. Okay, accrual basis focus on due. Okay, so this is the accrual basis. Once again, get a sum up with cash basis and accrual basis. Cash basis means cash basis record only when received in cash. Accrual basis record as and when it become due. Okay, these are the definitions of cash basis and accrual basis. Fine. Now we will understand the difference between cash basis and accrual basis. Cash basis, accrual basis. Okay. So what we have seen, the first basic difference is when revenue is received. Okay, and here we'll see when revenue is earned, means we have earned, not we have not received, just we have earned. In future we will jarur receive. Okay, now second, when expenses get paid. And here when expenses are billed. Okay, we are just making a bill, we are not paying here, we are just making a bill. Okay, it does not follow international accounting standard. Okay, it follows IAS. It is rarely used because it does not take in effect of accrual basis. So it is very rarely used because it does not give the fair result or a true result of financial statements. It is accrual basis is widely used. It does not give fair and true result. It gives fair and true result regarding financial statements. Okay, so these are all the differences between cash basis and accrual basis. Hope you have understand very well.
So after completing the basis of accounting, we have seen what are the basis of accounting. So now we will proceed towards the systems of accounting. Basically, there are two systems of accounting. The number one, double entry system. Okay, and the second one is single entry system. Fine. So how many types of systems I have told you? Two types. Okay, name them: double entry system and the second one is single entry system. Fine. The double entry system means the entry or the transaction which affect two sides. Okay, so what I'm trying to say is every transaction has two effects. Okay, the one will be debit and the other will be credit. If these two are present over there, then this will be known as double entry system. Fine. So see, I am giving here an example. Okay, so purchase of furniture. Okay, I am purchasing a furniture. So what I will see, I will get furniture and in return I have to pay money for of rupees 10,000. Fine. So I am seeing here that two accounts are affected. The one is credit, that is furniture is coming, and debit, that is cash is going out. Okay, so what I have seen, furniture is coming and cash is going out. So these two entries are affected. Okay, so these are known as double entry system. Fine. Now we will move towards the single entry system. Single entry system means it will affect only one account. Okay, means I have told you in this double entry that there will be two effects. Okay, but in single entry will not have a two effect. Okay, so single entry system means it record only the one side of the financial transactions. Fine. So if it records only one side, it means that it will record only the cash and the personal account. Single entry system can be called by the another name, that is single entry bookkeeping system. There is a one advantage of the single entry system is it does not need any special account, or you can say any special accounting knowledge to record the financial transaction. Fine. Now coming back to the double entry system, it records a complete record of transaction. But in single entry system, there is a drawback that it is an incomplete record of transaction. Fine. So I hope this systems of accounting is clear to you. This was a summary of the systems of accounting. In the further classes, we will see in detail what are the systems, how the entries are made in single entry system, and how it affects in the financial accounting. So I end my video here only. We will meet in the next video. Hey guys, hope this video has made the concept, and thank you for showing your interest. If useful, then like and do subscribe the bell icon for the upcoming next video. Till then, have a nice day. Bye bye.